When assessing the value of a multifamily property, the most important thing to look at are the financials. You need to know what monies are coming in, where they're coming from, as well as where the monies are going. Monies coming in are obviously going to come from rents. They're a big part of obviously any multifamily property. But one thing you need to look at is whether they're market or not. If they're not market, then there's obviously going to be opportunities for you to up them in the future. If they are market or above market, you need to know why they're there and if you can sustain them over the long term. Secondly, what you want to look at is other monies coming in, whether it be from laundry on site, rental of parking spaces, rental of your rooftop, or other sources. Where are these coming in and how long are they going to be staying? Is there any contracts in place and so forth? Next thing you want to look at is the monies going out. I mean, obviously the efficiencies of your building are very important. Money could be going out through literally open windows in the winter, old window panes, rooftops, and those sorts of things that need to be replaced could all affect the efficiencies of the building. What you got to really look at is where these monies are going, how they're being spent, and whether you can sit there and maximize the efficiencies in the future. Those two factors together really contribute to obviously the value of the building, as well as the decisions you're going to make as to whether you're going to purchase it or not. When I look to buy a building, just like in any business, you need to assess your market first. But my market is a little different than most. It's tenants. And our ideal tenant profile is something that we take into consideration in almost everything we do, actually pretty much everything we do. So in saying that, when I'm choosing a building, I need to look at first, what city am I going to invest in and why? So I need to consider a lot of factors they're going to help me choose the city, like the economics within it. I need to look at the businesses, I need to look at the schools and the infrastructure and that sorts of things that ensure an economy there is both thriving and going to survive a long-term haul. Are they a proactive municipality where they're going out and looking for companies to come in and invest in their city? Are they looking for schools to come in and again invest in their city but also bring in educated students in that? Is the city itself proactive in really expanding its economy? Other things you got to consider are the bylaws and things like that are specific to that city. Some cities have different zonings that could affect you in the long term, so really getting a good understanding of the city itself as well as what could affect you are very important factors in picking a city, where whether you're on the south side of the street or the north side of the street can make all the difference in the world in whether you're going to have a profitable investment property or not. It takes a lot of work, but it takes a solid team as well that can come in and help you out, whether they're real estate agents or management companies that can really help you determine what areas of the street you need to be on or what areas of the city. One of the big factors we use, again, we use obviously those services, but a big thing we need to bring in obviously into our mind is our ideal tenant profile and where will they want to live. So not only do we have to assess what areas to invest in with the city, we also have to assess where our clients are going to want to live. I mean, there's going to be many areas in the city that are appreciating, but one might be better suited for our tenant profile. So that's something we really got to consider. As long as it's all in a city that's poised for growth and can sustain the investment over 5 years, it's a happy place for us, as long as it's a happy place for our tenants.